Hey everybody, it's Swaminathan. Hope everyone's having a good weekend. It's Sunday, and what I wanted to show in this video is there was a couple of questions on how to use conditional order. So what we're looking at is our Google position. The Google position, we've booked a profit of 3,200 so far, but of course the position is still down. That's okay. We have an iron condor, and we also added this 5 contract position on the weeklies, and so you can see we have a positive delta with the line going up. But now let's say if Google continues to push up and let's say it hits 880. So we want to set up a conditional order where we want to buy 5 more of these calls, the 880 calls, but we want to buy it only if Google touches say 875 or 880. So it depends where you want to put your triggers. It could be at 875, it could be at 880. So for our example, let's say we wanted to put a trigger at 875. And if Google touches 875, we want to add 5 contracts to this 880 call. So basically what we would do is we come here, and in this 880 call, let's go over to the 880 call. We already have 5 contracts there. So let's click on the buy, and instead of 10, we change this to 5. And we want to set a condition to buy this if Google touches 875. So let's first create a duplicate order. And here on Think or Swim, you'll see this little gearbox here. And if you click on that, it opens up the conditional order screen. So the way you look at conditional orders is that the top part is the option itself, and this middle part is the condition. So here, if we put symbol Google method, if the mark price of Google is at or above 875. So this is where we set our condition. So we set it if Google mark price of Google is at or above 875, then this order condition will get triggered. And if it gets triggered, it's going to execute whatever we do on the top here. So first of all, we want to make this a good till cancel, because otherwise it'll get canceled at the end of the day, and you'll have to set up this order again the next day. So instead of doing that, we want to just set it as a good till canceled. We want to buy 5 contracts of the August weeklies, the 880 call. And instead of putting a limit price, now we can't put a limit price because we don't know what the price of the 880 call is going to be when Google is at 875. Now we can have a pretty good estimate of what that is, but rather than guess what the price of that option is going to be, you want to link the limit price to the mark price of this option. So the top part is the option. Now we are dealing with the option. So you want to link the limit price of what you pay for this option. You link it to the mark price of that option. Now there is something called a limit offset here, and this is very important. So please pay attention to this one, because now if you just put it at the mark price of this option, the market maker may or may not give you a fill, as we know. But if you give it a little bit more than the mark price, since we are buying, our offset is going to be positive. So we want to give a little bit more, say 5 cents or 10 cents more than the mark price. That way we can be fairly sure that the market maker is going to give us a fill. So that's how we set this up, and Think or Swim does a really good job of explaining this order. Once we set up all these things, this is the order description. So you can see it says wait until the following condition is satisfied. The mark price of the security is greater or equal to 875. So this is our trigger right here. This order will show a wait condition status during waiting. Then submit the following order. Buy 5 contracts of the weekly 880 call when the ask is at or below the mark price plus 10 cents. So, this order is issued when its price is set to the mark price of the instrument at that moment plus 10 cents. So Think or Swim does a really good job of explaining this in plain English as to how this order is going to work. So once we do this, you click OK, and here you would click confirm and send. And basically, again, it'll repeat some of these conditions: buy 5 contracts of the 880 call, mark plus 10 cents. The order condition is that the Google mark price itself should be at or above 875. So all that looks good. We click send. And once you click send, if you come back to your monitor screen, you will see that you have the Google thing right there. So you can see that the order is right there, and that's how it will execute it. So that's how you execute and it'll show a wait condition until that order is satisfied. So that's exactly how you would put a conditional order. And once you put the conditional order, then you don't have to worry about it. You don't have to monitor it, because you can certainly this order should get executed because we have given an offset of 10 cents. So that's how you would execute a conditional order. Thanks.